False breakouts were the name of the game today inside of the S&P 500. The most obvious false breakout, and the one that I think most of you could have recognized, of course, came during the lunchtime hour. This is the 12 to 1 p.m. East Coast hour, which is their lunchtime hour, where we see our classic setups, things like a breakout setup, a trend pullback setup. They have much lower probabilities associated with them during this hour. Take a look at this example right here. This was an example of a false breakout inside of the S&P 500 during the lunchtime hour. We break above our previous high, but very quickly you can see price action reverses with sellers coming right back into play. This looks almost like it was designed to trap buyers to the long side. I feel like the lunchtime hour is an hour which, for all beginner traders, is best spent by simply sitting out that hour. Now, if you are a little bit more advanced, you can take advantage of this hour by fading and being the contrarian in moves like this one. For example, instead of looking at a long side entry here, you're actually looking at a short side entry, looking to fade price action, being aware that, hey, this is a breakout which is occurring during the lunchtime hour. We don't really expect this breakout to have a lot of legs within it, a lot of strength. Usually, probabilities with the breakout setup are much lower during the lunchtime hour. So we're looking to fade price action here. Now the question is, where do you fade price action? And to help answer that, the volatility box gives you some very concrete levels where you're looking at price to exhaust. If we take a look at today's activity, that same false breakout area overlaps with our scalper volatility box zones. You can see price action breaches our volatility box levels. You can see we have two overbought confirmations. We have opportunities to enter at the sign entry line. Our stop is outside of the volatility box clouds, about 2.5 points of bare minimum risk, and we're looking for that same 2.5 in the opposite direction for our first target. Now we hit that 2.5 when we make the move to the market pulse right here, and we can still see buyers try one last time before sellers come in and just push price action down lower. So that's what we're looking to take advantage of. Fade the obvious setups, be a contrarian, especially during the lunchtime hour. Now I mentioned today was really just all about false breakouts. We can see that taking place even as this trade continues to play itself out. You can see your price action reverses, comes all the way back up, and we break above what is essentially just a few wicks above our previous high here before one more time price reverses. Very choppy price action today, really designed to, I think, hit as many stop orders as possible. One more time to the short side here, triggering all the shorts this time, and we fell just a little bit shy of our sign entry lines. Otherwise, this would have been a really nice long side setup as well. So the short side setup during the lunchtime hour was one of the places where we could use our volatility box levels to play contrarian and take advantage of being on the side of these false breakouts. Instead of trying to play to the bullish side, we in fact have our short hats on, looking at fading price action here. So hopefully, for those of you looking at trading price action, this helps to give you an idea of how price moves, at least during the lunchtime hour. The obvious setups during the lunchtime hour are usually the worst ones. They're designed to invoke the FOMO, what if that trade becomes a really nice winner and you miss the obvious entry, when more times than not, they have lower probabilities associated with them, and you're usually better off either sitting out on the sidelines during this hour or taking advantage by fading price action and being a little bit more of a contrarian. Take care, everyone. Good luck trading, and I hope you found this video useful.